Hey guys, today we're going to be talking about this book, Rich Dad Poor Dad. How many people have read this book before? It's called The Purple Bible by most real estate investors. And if you haven't read this book, I highly recommend that you go out and do read it. The author of this book, Robert Kiyosaki, loves to poke at dentists as the most likely group of high income earners to not convert their money to high net worth. One of the things he talks about is understanding a balance sheet. Most, 99% of the population does not understand it, and I would venture to say that 99% of dentists also don't understand it at a level that they might want to if they're trying to achieve financial freedom. So on today's video, we are gonna break down what the balance sheet is, and most importantly, what we tout on this channel, financial freedom. Hi guys, welcome back to the channel. I'm Dr. Jonny Walker, or Jonny Withananchi. I'm a successful endodontist with multiple practices, as well as a self-made multimillionaire in real estate investing. I'm also the founder and principal of a capital firm called Walk of Wealth, which is now invested in over 1,000 apartment units over the last 4 years. On this channel, we teach dentists, high-performing business owners, and high net worth individuals on how they too can achieve true freedom by investing passively in real estate. We're on a mission to not only make 1,000 people financially free, but we are on a mission to get people out of the stock market and into a more predictable wealth building tool called real estate. Investing heavily in real estate over the last 13 years has allowed me to take a giant step back from my clinical practice to an enjoyable part-time hours, as well as spend enormous amounts of time with my friends and family. We travel 6 to 8 times per year, and I have the time to pursue my passions, which is investing in real estate and educating my fellow dentists on how they too can achieve financial freedom. All right, guys, let's get started. This is what a typical balance sheet looks like. You have your income, which is from your job or working as a dentist, expenses of living, which could include mortgage payments or rent, electricity bills, water bills, and all the other things that you need in order to survive on a month-to-month basis. That's your expenses. Now, the assets are what you own and is what is used to determine your net worth. This could include stock holdings, whole life insurance policies that go toward assets, any properties that you own, cryptocurrencies, any investments. And then a liability are loans, and this could be your mortgage. This could be your student loan debt. This could be a business loan. This can go towards any loan or any type of thing that where you owe money. Liabilities, for example, a mortgage on a house would count as a monthly expense as a mortgage payment, right? So the liability is the mortgage payment is the actual expense. When you make that expense, part of that money goes towards paying back the principal, so your liability decreases slightly with every mortgage payment that you make. Now, where is the disconnect? That's not too difficult to understand. A lot of people here are business owners. They know what a balance sheet is. But this is where the disconnect happens. Majority of people, including doctors, when they make a huge, big income working, say they make $300,000 as an income, first thing that's paid is usually, especially if you're an employee or a W-2, is you pay taxes. And then majority of people, whatever money's left over, they use it to pay off their expenses. They make their mortgage payment, they pay a car note, they pay the electricity bill, they pay all that. Now, hopefully, majority of people, they have so many expenses because they also have the expense of paying for the iPhone, paying for the vacation, paying for $12 coffees every day, etc. Right? So the expenses can spiral out of control. Now, what happens is if your income goes way up, but now you can afford more things and your expenses go way up, it doesn't matter how much money you're making because by the time you paid your expenses, you have very little money left over. This column, on the other hand, is assets. This is where money that you've invested in things are paying you. Some people consider a primary home, the house that you live in, an asset. According to Robert Kiyosaki of Rich Dad Poor Dad, a house is not an asset, but instead belongs on the liability column. Why? It doesn't produce any income. Living in your home is an expense. that is paid here through a mortgage payment. As a result, Robert Kiyosaki doesn't consider a home an asset. It's a liability because you have to make the payment every month. Take an investment property, on the other hand, it would be considered an asset if it's cash flowing. Say you take a mortgage on a house that you buy, that's an asset, and now your mortgage payment is $1,000 a month. But now the income from that property, rent, is $1,400 a month. So now you have the liability of borrowing the money from the bank and you have to pay them $1,000 a month, but you have an asset that's bringing in $1,400 a month. So that $1,400 will pay off the mortgage of $1,000. So $1,400 rent, pay off the mortgage expense of $1,000 and spit off extra $400 as passive income. So now the asset is producing income. Majority of people don't get this far. So this is the concept of paying yourself first. Everybody talks about this, from Richest Man in Babylon, George Clayton's book, to Robert Kiyosaki's book, Rich Dad Poor Dad. It talks about paying yourself first. The income that you get, instead of using the dollars that come in from your income, the first thing that you should do is not paying off your expenses. Instead, you should have a fixed ratio. Some people say 80-20 rule, some people say 10%, some people say as high as possible. Whatever your situation is, try at a minimum of save 20% of every dollar that you earn and put it towards an asset. Learn to live off 80% or less of your income to cover your monthly expenses. So what that means is you have to have some responsibility. You have to have some ability to budget and learn that part, learn those skills. Personal financial management is a skill that a lot of us lack. I definitely did as a dentist. I just knew that all of a sudden I was making more money than I ever had. I can afford to buy this, I can afford to buy that because I can afford those monthly payments. That's how you get sucked in. That's how the golden handcuffs start to tighten around your wrists. The trick is learn budgeting early. Learn how to be a steward of your money. So now take another scenario. You take all the income that you make and you put 20% of it into investing in assets that can spit off cash flow. The 80% you live on to pay your expenses. As your income goes up, so will the amount of money that you can afford to live on. If you stay at that same proportion, you can live off 80%. If you're making $100,000, you got to live off $80,000. If your income goes up to $200,000, now you got to live off $160,000, and you can put $40,000 towards investments in assets. Take somebody that takes all of their income, active income, that's taxed very heavily, and pumps it into assets. They're buying 50% of their income. They're living well below their means. They don't buy the fancy car. They don't buy the fancy house right away. Instead, they keep buying tons and tons of real estate. The real estate keeps spitting out cash flows. And the more money that you have going down from income to assets, the more money that starts spitting out. The more money that assets start to make for you, the more money you have working for you. So here, you're working for the money. Here, the money's working for you. So the more money you have here working for you, the more money that it is producing on a tax advantage basis, often income tax free, whereas here you're paying high income taxes, here you're paying low income taxes, and the money that it's producing can help you pay the expenses. If you have enough money coming from your assets that you can cover all your monthly bills of your expenses, you no longer need this job. That was the aha moment for me from this Robert Kiyosaki book, is that focus on building assets. The more you focus on building assets that have cash flow, the more cash flow you have, the less dependent you are on a job to pay your expenses. This is the key to freedom. This is the key to exiting the rat race, is to build income, cash flow. You can't live off equity. If you got, hey, my stock market portfolio is worth $4 million. Oh, wow, great. So can you pay your expenses? Can you pay your rent with that $4 million? No. Oh, well, it's a blip on a screen. Like if I log into my Robinhood account, I see I got $4 million. Okay, can you pay a car note with that? Or do you have to sell it in order to get it? And when you do sell it, you incur significant capital gains taxes. So it's not the same thing. Cash flowing assets is the key. That's why we here at Walk Away, we love multifamily real estate. We love self-storage. We love these cash flowing vehicles that have low risk, and we understand that that is the key to financial freedom. So what do? We invest heavily into assets that cash flow, and that gives us greater certainty. It gives us greater flexibility that we don't need our jobs. We don't have to depend on our jobs. And it's a key to freedom, because now if you don't need this job as an income from a dentist, because you have invested prudently and wisely and you've built up enough income, now you can use that time to do things to fulfill your life. Spend more time with your family, spend more time with your friends, spend more time nurturing your mental health, taking care of your physical health, working out, eating right. These are all things that come with having freedom. That's what I created a company called Walk of Wealth. It helps the busy dentist and doctor invest passively in actual assets that will help them escape the rat race. If you're interested and you just want to learn more, but you just don't know how to get started, reach out to us. The website is in the description below. Feel free to book a call with me. Feel free to look at our website and educate yourself on investing passively. That is the best thing that I can advise to you, is go out and learn about this stuff. This is something a financial advisor will never tell you. They want you to invest in the stock market, lock it up for long periods of time, and forget about it so that they can continue collecting their fees month after month. We're not doing that anymore, guys. We're taking control. That's it for today. Hope that helps. If you haven't subscribed already, please hit the subscribe button. If you enjoyed this video, smash the like button and share it with somebody whom this might actually help. On the next video, I'm going to talk about why all dentists should invest in multifamily real estate. Click on the next video to hear more.